Good morning. Thank you for each of you joining us in the second of our Frankly Speaking webinars, where we hope to provide clarity to the issues that all of you are facing at the moment. Our speakers are from BDO and they have experience in their fields, and I'm sure you'll find their presentations very useful. In brief, BDO is the fastest growing professional services firm globally for the past 10 years. And we provide audit, tax and advisory services across multiple sectors. COVID-19 presents us with both challenges and opportunities that we believe we can help you with some of your immediate needs. And in this webinar, we are going to tackle what is the future post-COVID-19 going to look like? What is going to happen to the economy, particularly in South Africa? How will tourism, a key sector in the South African economy, recover? And how can we leverage digital opportunities now and in the world post-COVID-19? We hope we will provide some of the information that you need, but feel free to post any questions. You can either contact us directly after the webinar, or you can post questions whilst the webinar is participating. If you go to the show Q&A block that you got access to, and at the end of the presentations, we'll open to questions. To start the presentation, particularly dealing with the economy, I'm going to pass over to Andre Kutzer. Andre, over to you.
Thank you, Bert. So I'm focusing on unlocking the economy after this lockdown. It's a great privilege to speak to you this morning. And as Bert said, we're going to try and shed some light on the future, but a very smart man said, I never think of the future. It comes soon enough. And if you think when we were on holiday in December, we weren't aware of a virus finding its way through the Wuhan province in China, and now nearly 3.5 months later, you can't turn on the television or look at social media or any website and not be aware of the coronavirus and its related disease, COVID-19. There's a big reason why we need to restart the economy around the world and in South Africa. As you'll see on the next slide, we look at the International Monetary Fund. They do a World Economic Outlook every 6 months. They happen to do this at the start of April. And you can see in 2019, the estimate is that the world would have grown up to December last year at nearly 3% in real terms, or ahead of inflation, which was below par. The long-term average was closer to about 3.3 or 3.5% per annum in real terms. So it was below par, but certainly the world was not in big economic trouble. Roll forward 3 or 4 months, and you can see that the projection for 2020 is that the economy will shrink, the global economy will shrink by 3% in real terms this year. Now, just to put that into perspective, when we look at the previous crisis we had in markets, which was the global financial crisis in 2008 and 2009, during that time, the world never went into a recession. There were certainly some regions that went into recession, but global growth never went below 0%, so at least kept up with inflation around the world. This time around, the forecast is that we'll shrink by at least 3%. So that is why the economy needs to be restarted. On the next slide, we focus on South Africa more particular. And you can see that the IMF projection, the middle column and the bottom row, is that the South African economy will shrink by nearly 6% in real terms this year. So given that the inflation forecast is around about 4%, it means that in absolute terms, the economy will actually shrink by 2%. Just to give you a little bit more context about that number, the 6% reduction in our real growth rate of our economy equals the total additional growth we've had in the last 6 years. So it really puts South Africa back on its economic output at the start of 2014, and that is a significant number. So it's clear that there's an economy that needs to be restarted. And if we move on to the next slide, there are a few very important policy objectives of an exit strategy out of this lockdown phase. First of all, the rapid spread of the virus needs to be mitigated. If we have a look at the statistics, the spread of the virus in South Africa certainly seems to be lower than in comparable countries and certainly in the developed world. There are a number of theories that says it's because our testing is not quite up to the pace that it should be, and that's certainly picking up. But if we look at the data, it certainly seems as if our government have been fairly successful in mitigating that risk. That has given them the time, this 5-week period of lockdown, which is really a very blunt instrument. But that has given the government time to strengthen our healthcare systems so that hopefully that won't be overburdened once we get out of the lockdown period and the spread of the virus will naturally pick up. Another policy objective that will be taken into account as we get out of this lockdown is to protect high-risk individuals, typically the elderly and people with an already existing condition such as TB or HIV/AIDS or diabetes, for instance. And then what the government takes into account with their task team is to really make economic activities possible while managing the associated health risks. And we saw the minister's an announcement last night where mines are now going to start to reopen with very, very strict screening protocol and making sure that if there is an outbreak that they can contain it and localize it and treat it as such. So those would be the important policy objectives that the government takes into account, and it's of course supported by fiscal and monetary stimulus. Now in South Africa, given the perilous state of our government finances, there's not a lot of fiscal stimulus that we see, but certainly from a monetary point of view, the Reserve Bank stepped in and have already reduced interest rates by 200 basis points on top of a 25 basis points cut at the start of the year, which should certainly help the economy to get out of this crisis. If we move on to the next slide, some of the considerations that businesses should have in this times, and I'm guessing that many of you dialing into this webinar this morning are business owners or are fairly senior in businesses, but probably the main thing is to have strong leadership and clear communication. And that reminds me of a quote by Peter Drucker. It's a quote that is more than 20 years old. But on the next slide, you'll see that organizations are no longer built on force, but on trust. The existence of trust between people does not necessarily mean that they like each other. It means they understand one another. Taking responsibility for relationships is therefore an absolute necessity. It's a duty. And you will be surprised as your employees start coming back to the office, how their views on this virus and the pandemic differ, and how some of them perhaps have a laissez-faire approach and others are almost over the top in terms of hygiene. And that's a new angle, a new principle that you'll have to understand in your businesses. Moving on to the next slide, we've got a list of other considerations that businesses would have to take into account as you come out of lockdown. Screening is going to be very important. There'll probably be the Department of Health or the World Health Organization will probably subscribe a screening protocol that most companies would have to implement. You are fortunate in the sense that with mines starting to reopen now, they'll probably learn quite a number of lessons, and hopefully we would be able to adapt that in other businesses. I spoke to one of the senior employees at a large logistics company in South Africa, and they are bringing in loads and loads of personal protection equipment, which you'll have to have in your business. So that would be gloves and masks and hand sanitizer and all of those things that we already started having in our businesses as we went into this crisis. What's also important is flexibility around childcare. Now, it's not clear yet what the government is going to do in terms of reopening schools. If we look at the UK and other countries where they already started publishing their guidelines, it seems as if primary schools will be early on in opening because those are low risk, or it is a low risk part of the population. And hopefully that'll help, but just bear in mind that if you want to bring workers back to the physical location of your office or workplace, that you'll have to take childcare into account, and obviously a hygienic environment. I think more importantly will be a very disciplined management of your balance sheet and income statement. During this time, a strong balance sheet will help. We saw some information from Stanlib Investment Management earlier this week, where they show that the typical small business, the median small business, only has 27 days of working cash available. It's a month, right? And that we are now in that month of April. So chances are that you'll have to be very disciplined around the management of your balance sheet and your income statement. And if you want to make the most of assistance, there's some tax relief, UIF, etc. Somebody at BDO will certainly be able to help you, but make sure that you are well informed as to how your business that you are part of can be assisted during this time. Then I'm going to move on to my last slide before I hand over to Leanne back. And that's really just in terms of the investment implications of this lockdown and the exit, and it'll certainly be a gradual exit from this lockdown period. What's very important in a South African and national sense is that our government is still able to fund the budget deficit. This budget deficit will balloon given all the expenses that they now have to pay in fighting this virus and the fiscal stimulus that they've announced. And in order to do so, we need to issue bonds. Now, you all know that South Africa has now been downgraded to below investment grade, which typically means that our bond yields go up. There was a little bit of a spike. It came down after that. And South Africa still seems to be able to fund our budget deficit in the open market. So we certainly get a green tick for that one. As I mentioned before, strong balance sheets remain key. Be very, very careful about what you do with your balance sheet and how you protect that in the months and years to come. Many of the people listening today would be interested about what does this mean for the rand, certainly against the US dollar or other foreign currencies, either because you have investments abroad or because part of your business has expenses or revenue that is not in rands. So there are many factors influencing the rand. One of them, a very important one, is the interest rate differential between South Africa and the US. And with our interest rates coming down by 200 basis points, it means there's a smaller difference between our interest rates and the US interest rates, and that certainly puts some weakening pressure on the rand. And we saw the rand going from about 18 to nearly 1880 this week after interest rates were reduced at the start of the week. But there are other factors also. It's not only the interest rate differential, it's also the imports and exports of South Africa. So South Africa is generally an importer of energy, an importer of oil. So a low oil price and a sort of fairly stable rand at these levels means that we are importing fuel or energy at a lower price. We are still exporting iron ore, platinum, gold, and other industrial metals, and those prices have remained fairly stable. And that actually helps the rand. It helps to strengthen the rand. So that also plays a role in the rand. So it's not only interest rates. It's certainly not what politicians are saying. There are much more bigger fundamental issues at play. So we think the rand should strengthen somewhat towards the end of the year, but will be volatile in its way going there. And then just one last point. Globalization as we know it will take some time to recover. So globalization has been a big factor in strong equity markets, certainly since 2008 and 2009, the previous financial crisis. But we think that globalization will take some time to recover because now it's each to its own. Every country is looking after their own interest. And that's certainly if your business is involved in global supply chains or you import or export globally, something to take into mind. It's going to take some time to recover. Let me stop there. I think on a more specific view on tourism and travel, which I didn't touch on, let's hand over to Leanne back.
Thank you, Andries. And thank you. Good morning to everybody, and thank you for listening today. Andries touched on the fact that globalization is going to take some time to recover. And that definitely also plays into the travel and tourism sector. And I mean, it's no secret that the travel and tourism sector has been the sector that has been the hardest hit in these times. It basically went from operating normally to zero demand overnight. And whether your business is small or large and you operate in the sector, they're all facing the same challenges. They're all trying to work through the fact that they've got no income. and they're focusing on stopping the immediate challenge of, they're working on the immediate challenges of stopping cash outflows. But now the question comes into play as to how long do they need to hold out for, and when is tourism actually going to be revived? And BDO has got a specialist tourism, hospitality and leisure advisory team, for those of you that don't know, and we've been operating in the sector for actually more than 35 years. So we've taken our knowledge of the markets and we've done what we believe is a high-level forecast of where we think things are going to go. On the next slide, we talk about the fact that the big question is, will we actually travel again? I mean, will there actually be tourism? Will it be the same as it has been, or the industry that we've known? Well, we do know that there's demand because we know that people are desperate to travel. Being locked down is not fun. I'm sure most of you have experienced that. And there's a recognition that experiences are very, very important. And we're starting to value experiences above things, above inanimate objects. So there's actually a pent-up demand to travel. The supply is also there. So what we're facing is not a supply and not a demand issue. The issue is a confidence and a trust issue. It's psychological. And people are not traveling, obviously, because they're concerned about contracting the virus or transmitting the virus. They're concerned about a lot of the problems, a lot of the things that tourism presents, which is large gatherings of people, be it at airports, at airlines, at crowds, going to attractions. So they don't want to go out. And then there's also the risk of, if I do travel, is there a possibility that I might be quarantined when I come back from my travel? And do I have leave and ability to actually be quarantined for that period of time? There's also the risk of traveling and then finding yourself in lockdown in another country, which is a huge concern. So people not wanting to travel for that reason. And then, of course, the bigger concern is the fact that now that we're in lockdown, a lot of people are utilizing their leave, their valuable leave, to be in lockdown. And it also means that a lot of people are going to be without jobs. So we're going to have a huge impact on disposable income. And as we know, travel and the ability to travel is very much dependent on disposable income. So without disposable income, we're going to see a massive decline in demand for travel. So we will travel again. It will happen again. But the next question is, when are we going to travel again? And on the next slide, we start to actually talk through when we might see this happening. And this, if you look at this graph at a very high level, we've got a number of key events. The one being is lockdown in South Africa, when we went into lockdown. The other is when we come out of lockdown, and now we know that is going to be a very gradual process. It's not going to be an out of lockdown all happening at once. It will be gradual. The next key event that is going to impact on our travel and tourism industry is when the world comes out of lockdown. And once again, that's also not going to be a hard and fast date. It depends. It's going to vary country to country. And there will also be gradual transitions out of that. But the key requirement here is we need to have borders open so that people can travel. And then the next key date is when there is universal access to a vaccine. Or alternatively, what we call herd immunity. In other words, more than 60% of the world's population is actually now immune to the virus because they have been exposed to it in some way or another. When that is going to happen, my knowledge is probably as good as anybody else's. We're estimating possibly, hopefully by the end of 2021, but we have to see what's going to happen. We also all know that events are evolving and our information that we're gathering is changing all the time. So I'm putting a caveat in terms of the forecast that we're putting forward, in that this is based on the knowledge that we have at the moment. Things can change. It is also based, the forecasts we're putting in place are based on the knowledge that we have of the travel and tourism sector and our understanding of the various markets. The first market we're going to talk about is the domestic leisure market. And this domestic leisure, it's widely understood that the domestic leisure market is, or the domestic market in particular, is the one that's going to be driving our tourism industry for the foreseeable future. And as Andries mentioned too, Globalization is going to take quite a while to recover, and it's because every country is going to be focusing on each to its own, is the words that he used. And this is the same with domestic tourism. There's going to be a huge focus on staying local, buying local, supporting local. And that is obviously because people are scared to travel internationally, but also recognizing that they're wanting to keep the money locally to redevelop the South African economy. So what we are likely to see as soon as we come out of lockdown, and as soon as people are allowed out of lockdown, depending on their requirements, there's going to be a mass spike in local travel. And when we talk about local travel, we talk about very localized travel. It'll involve people going to restaurants, visiting their family and friends, getting in a car, driving to their family holiday homes if they have, going away for a weekend, reconnecting, spending some time outdoors, spending time with those that they love, and their friends. Obviously, it's about mingling, it's about getting together. Then, unfortunately, realism is going to hit as everybody is faced with limited or no money. And so there's going to be a drop again in the domestic tourism side, which is slowly going to increase as people become immune and as they're getting a little bit more disposable income. But there's no ways that this is going to get back to what we call normal levels for quite some time. And that is purely because of the weak economy that we're going to be sitting in. So we're expecting at least until 2023, are we possibly going to get back to normal? We've got 2019 there because 2019 was not a normal year. We were already a depressed year in this country. So hopefully we can get back to 2019 levels by 2023, but in reality, normalcy is probably going to take a bit longer. The next market is the domestic business market. Now, the business market is also going to be subdued, but there will be a spike because business is going to have to continue. It will take a little bit. Once we come out of lockdown, there will be this quick. There will be people who will be wanting to travel to reconnect with their clients for those important face-to-face interactions. People need to commute. Those who live in Cape Town and work in Johannesburg or vice versa, they need to get around. They need to commute. So there will be travel happening to support the economy, but once again, it's going to be limited because employees are the ones who are going to be turning around saying, I don't actually want to travel. You cannot force me to travel. So this is something as employers we need to reconsider in terms of how the requirements we have for our staff and the role that they have in playing in terms of determining where they travel and how they travel for work purposes. But it's going to be the younger, more courageous people who are going to travel. The older people are unlikely to travel as much. And once again, only once we've got a vaccine or the immunity are we going to see an increased spike. And it should be slightly ahead of economic recovery because business travel will be a key driver in terms of creating that economic stimulus. And then the final market in the domestic side is what we call the MICE market. And for those of you not in the sector, that refers to the meetings and the incentives, conferences, and what we call events or exhibitions. This was the hardest hit industry or subsector. It went into decline the fastest, and unfortunately will take the longest to actually recover. And the reason for this is because of the mass gathering situation, where people are concerned about bringing groups of people together. And the other reason for that is because a lot of these markets or businesses, conferences, etc., are what we call hypercyclical. So when the economy is tough, the first thing that get cuts in budgets are conferences and meetings. So this one is going to take a little bit longer to recover, unfortunately. And we're going to have to be quite creative as to how we actually re-stimulate the sector around in terms of the MICE sector. And obviously we've taken a bit of time, we've all been utilizing platforms such as this to compensate for the fact that we're no longer meeting in person. There's a lot of questions about will technology overtake and negate the need for face-to-face meetings going forward. The general consensus is actually it might even heighten it. But instead of either technology or face-to-face, we're likely to see more combination events where we're going to be able to join events by using technology as well as face-to-face. And what technology has done as well is also heightened the fact that we need to actually, the value of face-to-face communication. On the next slide, we actually look at the foreign tourism sectors. And the first one we look at is the foreign leisure market. So although what we are likely to see here is obviously not only travel once the international borders are open, but the first people that are likely to come back to South Africa are young, adventurous travelers. So those who are risk takers, happy to take the risk, happy to look for deals and opportunities. What it does mean for our tourism industry, though, is that this is a different type of market to what we've traditionally been hosting in this country. A lot of our product is geared towards the older generation traveler. And that means we're going to have to rethink our product and the services that we're offering to actually cater for the younger, more adventurous. And in reality, our traditional market is only actually going to travel again when the vaccine is in place. So this is a big concern for the industry, because obviously foreign leisure is a massive stimulus for our economy. The next sector is the foreign business sector. This should be ahead of the leisure sector, and the reason why there's a little bit of travel before the international opening of borders is because of some of the regional travel that will happen. And we're going to start placing more emphasis and more value on our local traders. So in other words, the cross-border traders that we tended to ignore or not place so much value on in previous cases. And once again, this will be entrepreneurs looking for opportunities in the emerging markets and looking for opportunities in Southern Africa who will be coming through to South Africa. And the final market is the international MICE market. Which is the market that is going, once again, like the domestic MICE market, is going to be very hard hit. And unfortunately, international travel for meetings or conventions and events is going to be really limited. And for all the sports fans out there, there's going to be huge implications in terms of our sporting events and how sporting events are hosted. And we're likely to see sports happening without spectators. We're also we're likely to see limited spectators, so huge price increases for the few tickets that might be available for sporting events. Which is quite depressing, but also other live events like live concerts, etc. This is something that is going to be very slow in coming back until we've got proper protection for people who are attending these events. So on the next slide, so basically we're saying we will travel again, but it's not going to happen overnight. It's not going to be a V-shaped curve. It's going to be more of an L-shaped curve with a slow uptick towards the end. And it's not because we don't want to travel. It's more because of our concerns for our health and because of lack of money. But there's going to be some significant changes going forward as well in terms of how we'll travel. As I mentioned, the domestic market is going to be the key market that's going to drive our travel industry going forward. But it also means that we're going to be traveling very locally, so within driving distance. We're not going to be jumping on planes too quickly, too easily. Some will, obviously, younger people once again. But there'll be more comfort in driving to our holiday destination or going to visit our family in terms of driving distances. People are also going to be seeking more creative, stimulating, recreational activities. So we'll be looking to connect back to nature, connecting with other people, but not in big groups. They'll be looking for widely dispersed and open spaces. So the advantage here is South Africa can cater for this because we've got a lot of rural destinations, wide open spaces, game reserves that really appeal and can provide what people are looking for. What we need is more providers and service providers to offer that creativity, to provide that stimulation, and to provide some of that adrenaline rush that we're probably going to be looking for in these uncrowded spaces. The advantage is also we're possibly going to be seeing the end of what's known as what we call over-tourism, where something like Venice, where we've had this mass tourism that has literally destroyed a city because of people tourists flocking to see the various sites. And what we're going to see is people actually wanting to disperse wider and further apart. Once again, linked to the fact that we don't have any money, we're going to be looking for more affordable destinations and more bang for our buck. So that really, unfortunately, a lot of our tourism product is geared towards the foreign market and priced in US dollars or priced in very high rand rates, which unfortunately the bulk of the domestic market will not be able to afford, even if these products are discounted to a huge extent. So this has an impact on our product and what we're offering, and we're likely to see a number of products that are not going to be able to fill up in the near future. And it also means that we likely to see the demise of various products within our service offering, unfortunately. Sustainable and responsible tourism is going to be key. And if we're going to travel overseas, we'll be traveling less frequently. So these will be more prized trips, and we will take so we'll make sure that they're longer, and we'll make sure that there's more depth and meaning in these trips. And as we mentioned, the younger markets are going to travel first, but that means that we're likely to see new channels of how we actually market to get to these younger markets, utilizing social media and direct product to consumer marketing channels. And we also like to see that we're going to be traveling with our own health passports and possibly our own personal protection equipment. We're going to need to also, for everybody, for all the travelers out there, it means more visa regulations are going to come into place, because not so much about your anti-terrorism requirements, but more around your health, indicating your health and well-being. And as travelers, we're all going to expect improved levels of hygiene, within not only a focus on our safety and security of our personal, but very much a focus on health as well. So finally, almost finally, second last slide. For those of you that do operate in the sector, there's lots that you need to consider, and we take this time to recognize that the industry is going to reset. Everyone will be starting from zero base, whether they're a small business or a large business. It's an equal playing field, and it's about how you prepare for this restart, which will determine where you end up. So just some opportunities that you should consider include identifying what new services or products you can offer, the new markets that you might be attracting, where technology is possibly going to play a role and can replace some of your operations so far, minimizing human contact. And you need to look at strengthening your unique selling point. In other words, where you can play where technology cannot play. You're also going to need to look hard at your cleansing and hygiene protocols, and your staff training and awareness. And obviously the exchange rate has advantages for our tourism industry because it keeps domestic travelers home, but it also makes it more affordable for foreign travelers. So that's something we can possibly capitalize on. And then once again, for those of you that are operating in the sector, on the final slide, is really, you need to be proud of your response. And as the travel and tourism sector, we're saying, can you in any way assist in the current crisis in providing services to essential workers, the poor, the homeless, the elderly, the vulnerable, victims of gender-based violence, the quarantined and isolated? There are some opportunities here. And it's also important that although you might not be able to provide a service to your typical guests at the moment, it's important to remain top of mind. And it's important to consider how you can tell good stories on an ongoing basis at the moment, but remaining top of mind. And consider how you utilize your employees and your facilities to provide online tutorials and experiences for your guests or potential guests. So that's the end of my presentation. And when I talked about the tech environment, I'm going to hand over to Nevlin Moodley, who's actually going to talk about the opportunities around in the digital sphere and in the tech sphere. So over to you, Nevlin.
Thank you, Leanne, and thank you everyone for joining up with today's webinar. I just wanted to share something. So yesterday I had the pleasure of taking a tour to visit the Great Wall of China, and it was a very interesting and innovative experience. It was quite a lot of history involved in it, and when I put my artificial intelligence or my augmented reality glasses on, it was quite an experience. And I think that's one example of how technology is going to be used on the tourism space as an example. So just an introduction myself. My name is Nevlin Moodley. I'm a partner in BDO's financial services technology business. and I'm a big proponent and exponent of the fourth industrial revolution, as well as exponential technologies. And I just want to give you some highlights of what's been happening in the world around us. So I was an early investor in a virtual reality platform, and I was able to acquire the city of Cape Town on this virtual reality platform. And those investments have grown as far as 700% to 1,000% in the last 2 weeks, just purely with the number of people that are wanting to visit Cape Town in a virtual reality type environment. And I think it's a great example of how the coronavirus has accelerated digital transformation in the world that we live in at the moment. So I want to just share a few more stats with you before I go on. Microsoft Teams, which we are currently using, has seen an increase from 30 million users to 50 million users in the last 3 weeks. And that is an example of exponential technology at work. The other things that we are seeing is Netflix has hit an all-time high from a price perspective. So has Amazon, Hulu, as well as Disney. And regulators have gone as far as to consider them essential services, because I'm a lot happier that I've got my iPhone that I can stream using Wi-Fi at the moment, because imagine what this quarantine would have been like 20 years ago with the Nokia 3310. We would have snake champions of the world. On that note, I think that digital companies are seeing a great opportunity to accelerate their digital transformations, acquire clients, as well as take advantage of the opportunity. And I think the world as we know it is going to become more digital as a result of the coronavirus. We are seeing that across our financial services sectors in terms of the plans our clients are putting into place in terms of being more digitally enabled. On that note, I must caution you around something. For those of you that were using Zoom, Zoom started at the beginning of the coronavirus and were nicely positioned and nicely set up and actually saw the greatest hike in their share price in the last 3 years. And then on the back of privacy issues, or rather poor risk management issues, they've seen a drop in users of up to 50%. And all of this has happened within a 3-week sort of period. And the net answer to this is that while we need to digitally enable, we need to also manage risk. So my first slide is a real tweet from Michael Jordan, who's been an inspiration to me throughout most of my career. And he proposed that the SaaS switch fee, which is effectively the fee you get charged from drawing out of a different ATM to your original bank, be scrapped in 2006. As a result of the coronavirus, it got scrapped within 2 weeks because of the challenges we are facing under lockdown. And it's again another great example of how, as a result of the disaster that's going on in front of us, an opportunity has been seen to change the world. And it can be seen that change can happen very, very quickly. Next slide. Okay, and I think digital touch points is something that I'm very passionate about. I think in the last 2 years, we've seen a great increase in terms of the fourth industrial revolution. And what I've seen over the last 3 weeks is an increased acceleration. However, with this comes challenges. So some of the challenges we've seen, if you were a business that didn't have an online channel, or couldn't adapt quickly enough to become a essential goods and services supplier over this period, you've effectively dropped your revenues close to zero. So on the customer front, we're seeing an acceleration in terms of our clients trying to move their customers to digital channels. On the employee front, what we are seeing is that if you relied purely on engaging with your employees from a physical perspective, so physical meetings, checking up physically how they are, if you had no digital sort of policies or digital ways of interacting with your employees, this is a time that you could lose a lot of your employees or lose engagement with your employees, which could threaten you in the long term. So what we are seeing is a rollout of a whole lot of digital wellness programs, online exercise programs, online tracking of their employees. And our clients that have invested a lot in terms of digital touch points with their employees will probably be more successful in the long run in terms of managing their employees and keeping their best talent in their organizations. To the tweet that I previously showed with Michael Jordan, I think regulators are trying to see exactly what they can do to assist during this lockdown. One of my big regulators that I interact with is the South African Reserve Bank. And I think you've seen in the last month, effectively a 2% drop in interest rates across the board. Now, I've never seen as large interest rate drops in all my time in the profession. And it just shows as well how regulators are looking at opportunities. And I think you can expect to see regulation coming out very shortly in terms of limiting contact. I mean, tapping your credit card, while cardless technology for payments is something that's been experimented and being pushed for a long time. And it was always said that Africa is not mature enough for this and is not ready for this. However, the coronavirus has forced us down the line that we're going to have contactless type solutions going forward. And I think if you follow online in terms of solutions such as Zappa, etc., the number of clients they have onboarded in the last 3 weeks while we've been in lockdown has been up to 3 to 4 times increases in terms of the number of clients that are using them. From a societal perspective, I think one of the things that we are seeing is that as corporates and as broader players in the broader economy and the broader society, we need to have ways as companies that we can engage with the broader society. So I think a lot of the investments and a lot of the funding that has gone into the Solidarity Fund, it could not have been enabled unless it was digitally created. And a large organization by the name of EOH effectively put up the Solidarity Fund website, and they did it in 2 days and got it accredited and ready. Now, in my world, this is unheard of. It's always been possible, but there used to always be red tape. This has been resolved as a result of the coronavirus. And I think it's great learnings in terms of how we can go forward and take these principles and remain very agile going forward. Next slide for me. Okay. And yeah, just to carry on those same themes, I think what we are seeing across all of our clients is that they've got the highest amount of traffic online. And this is the perfect opportunity for all of our clients and corporations to monetize the data in terms of how people are interacting with their app. Take more of your services and put them online and make them digitally enabled, but also track how your clients are interacting with them and make the user and customer experience better, because that will save you in the long term and allow you to provide a better customer experience going forward. And I think a key message we're giving to clients is post-COVID, there's a lot of things that are happening during the COVID period that we should still embed and embody, because it's effectively going to keep our businesses more sustainable and allow us to accelerate in terms of our fourth industrial revolution evolution that we are going through. I think one of the biggest heartaches for me in the last 3 weeks has been I engage with fintechs. We interact with a network of fintechs in excess of 50 to 100, both locally within Africa and globally. And the number of deals that have fallen through in the fintech space as a result of COVID has really impacted the sustainability and livelihoods of these fintechs. They've had great products, great solutions, which now have ended because the funding has effectively been pulled. But what we're seeing on the corporate front is brave corporates are finding great value in the acquisition market in terms of acquiring fintechs that they are building with the longer term view. A good example is the virtual reality platform that I mentioned to you. Is a good acquisition at this point could create some great revenue streams for you going forward. And I think while we are in this fourth industrial revolution acceleration, clients and corporates need to take the time, monetize their data, and get to know their clients so well that going forward they can leverage off those insights to remain competitive and continue to service their clients and remain profitable. Next slide, Ashley. Okay. Some of the challenges that we are facing. So I've actually split this into 2 parts. One is people. Technology, contrary to popular belief, technology and people need to work together. And I think the shift and change, so for example, for myself personally, and for most of you on the call, we've gone from working in an office and having meetings, etc., to now being sitting at home completely. The adaptability of people and the cultural change needed for this are initiatives that, if ignored by companies regarding their own employees, as well as their own clients, will probably lead to the demise of their companies. So the people aspect becomes very important in terms of how you integrate technology and people together. And one of the key things that we are seeing across the market in financial services and other sectors is that as a result of this increase in digitization, there are so many third-party software service providers that are being relied on. So a great example being the Zoom example, which I'm going to use again, is that they did not manage their privacy risk well enough, and they lost half their client base on a digital solution within a 2-week period, which means the market shows no mercy at the moment to companies and digital offerings that don't have their risks well managed. So manage your third-party risks wherever you're getting IT service providers or someone coming in to help you with managing your cybersecurity risks. Just be very aware that if you do not manage these risks well and do not identify them in time, it could potentially end up in that while you've digitized your business, you could lose half your customers on your digital platforms because you haven't provided them with enough safety and security. And I think as we move into the deeper into the 21st century, data is really becoming more valuable than oil. And I think if you look at the oil price at the moment, it just shows that data is becoming even more valuable. So I think to conclude, stay safe, stay digital, and enjoy the opportunities that come out as a result of COVID, because accelerating down into the fourth industrial revolution is going to present great opportunities, and I hope that it ultimately brings better human life to all of you. Thank you very much.
Thank you to both our speakers and for Ashley for assisting in the background. So our speakers, just to recap, Andries Coetzee, Leanne Back and Evelyn Moodley, and thank you to the three of you for being frankly speaking and for sharing your great wealth of knowledge. We're now moving to the questions Q&A section, and just as a reminder, you can post your questions in that block referred to as Q&A. Feel free to post those. We will be sharing the slides that you've seen later on, and you will also have access to the webinar by accessing our website, but we will share that information further. I'm going to pass on to Ashley that will direct the questions to the respective speakers.
Thank you, Bert. Morning, everybody. So our first question is a question for Leanne, where one of our delegates has asked, is this information research-based or based on assumptions? And that was specifically with regards to your presentation.
Thanks, Ashley, and thanks to, I think it's anonymous, I'll call them anonymous on their question. It is based on assumptions because obviously there is no research at the moment in terms of what the future is going to look like. But it is based on our extensive understanding of each of the markets. And as I mentioned at the beginning as well, where I said there's a caveat in here, is that obviously as we understand, the more information we get, the situation is very fluid and things change all the time. The graphs that we presented was more, it wasn't each market relative to the other, it was more about when will we be returning to normal. So it's our assumptions based on where we think things are going to go into the future, understanding the markets, understanding the challenges, and the global trends. So we have been looking, we have been tracking what's been happening in China, because obviously China is a couple of weeks ahead of the rest of the world. And so China's starting to see a slight recovery in the travel and tourism sector. Some hotels are starting to reopen, not all of them, in key cities, and they're seeing mainly business travel and very localized travel. Hotel occupancies are picking up to around about 35% on average for those hotels that are open. So things are starting to happen, but we also have the understanding that things are going a little bit backwards again in China. So it's a little bit of an up and down. Yeah, and as soon as we have more information, we will be updating our forecasts as well.
Thank you, Leanne. The next question I'm going to hand over to Andries. What does V, U, and L-shaped recovery mean?
Thanks, Ashley. Now, typically, recovery refers to either a recovery in the economy or a recovery in investment markets, which are more often than not represented by the equity market. Just bear in mind that the equity market typically looks ahead and more often than not recovers way ahead of the economy. What the V, U, and L-shaped recovery refers to is really if you could imagine a graph of, let's say, the JSE All-Share Index, which was sitting nicely at 59,000 points in the middle of February. It then very sharply fell to under 40,000 points. I think 38,000 points is where it turned around. Now, if you imagine that that is the left leg of either a V, a U, or a L, the right part of the letter guesses how the market will recover. So if it's a V-shaped recovery, you typically have that fall from 59,000 points to 38,000 points, and it bounces back to sort of a similar level in short order. That would draw a V on a graph, and that would be a V-shaped recovery. A U-shaped recovery is one where markets fall, in this instance, from 59,000 points to 38,000 points, and then muddles along the bottom for a little bit, so goes up and down, and then eventually there's a sharp and short recovery. And you can almost imagine that as the letter U. And then an L-shaped recovery, often also referred to as a hockey stick recovery, with the short end of the hockey stick on your left-hand side and the long handle of the hockey stick on your right-hand side, means that markets fall very sharply, as we saw, and then takes quite some time to recover. So in terms of time to recovery, a V-shaped recovery is a short and sharp fall in markets and a short and sharp recovery. A U-shaped is a short and sharp fall, followed by muddling around the bottom and then a strong recovery. And then an L-shaped recovery, which we think is probably the most likely outcome for markets at this point in time, is we have a short and sharp fall, and then markets take some time to recover. And that's really why the letters V, U, and L are used.
Thank you, Andries. Leanne, we have another question for you. Is there a difference to when the luxury segment may travel? Higher rate, lower volume versus the mainstream, higher volume versus lower rate?
Thanks, Ashley. Before I get there, I did see in the commentary that somebody wanted to know about the shapes with regard to the pickup of travel. And I think adding on to what Andries was saying in terms of various shapes, I don't know how to describe it, but we sort of we're sort of forecasting, yes, an L shape for the travel and tourism sector, but it's going to be a bit of a pickup, and then it's going to remain with that little, I don't know what shape it's going to be, a bit of a pickup, and then after a while we will see a faster paced pickup after the reintroduction of the introduction of a vaccine or herd immunity. And then just with regard to when are we going to see the difference between the luxury segment when they might travel and the mainstream or the high volume, low rate travel. So, I mean, it's obviously that's when it comes to the luxury segment, often these are older people because they've now got wealth, they've got money to be able to spend on luxury travel. And the big risk, but obviously the big risk here is that these people fall into the high risk category. And so I do not believe we're going to see a major pickup in this market until the vaccine or herd immunity is in place. There will be those who are adventurous and wanting to step out, so unless somehow our aircraft and our airports can provide sanitized environments that can allow people to actually travel and reach our country, this particular market is going to take a while to actually pick up again. So we're going to have to, the domestic market is very much more of a volume and a lower rate market, although we're not going to see the huge amounts of volume, but it's going to be a lower rate focus for, I would say, the next 2 years at least. This year, in reality, 2020, when it comes to the travel and tourism sector, is basically a write-off. There's going to be it will happen, but there will be limited demand in terms of the travel and tourism sector for this year.
Thank you, Leanne. I'd just like to add that we have a lot of questions coming in, and I'm not sure that we'll be able to get to all of them before we close at 11. So we will respond individually to your questions after this webinar. So I'm going to take a question from Marissa. How will this impact recreation facilities like gyms and other indoor sporting facilities? You mentioned people rather opting being creative and choosing outdoor activities.
Yeah, so again, that relates once again to the fact that gyms, indoor sport facilities, it's about the number of people that actually gather there. How many people are going to be in the gym, and what can that gym provide in terms of sanitizing, hygiene, and making people feel comfortable and confident that they're not going to get ill or contract the virus while they're in the gym. So if I was operating in the sector, I would be looking towards how I can move my facilities outdoor, how I can move my facilities, how I can provide group-based exercising and activities, but that are small group and where people actually know each other. So small group activities, etc. Thank you,
Leanne. A question from Ricardo about outlooks for portfolio investment returns over the next 1 to 3 years. Andries, can we hand that to you?
Thanks, Ashley. There's also a second question on international markets, which I'll answer in the same vein. So the question is, what's our view on SA inflation and portfolio returns over the next 1 to 3 years? So inflation is likely to remain very, very low, sort of 4.5, 4. Some commentators even expect it to go below 4 for a sustainable period of time. So we think that inflation is not going to be an issue in the next few years. It does have an impact on the real or the nominal return of portfolios. So we think that cautious type of portfolios are likely to deliver a return of 7, maybe 8%. So inflation plus about 3%, still well ahead of cash over the next 3 years. And then balanced type portfolios with a bit more equity exposure would do very well to deliver 8 to 9% per annum. Now, I know that 8 or 9% per annum doesn't sound like a lot. We've come out of a 10-year period where balanced funds did particularly well, but we must also bear in mind that during that period, inflation was sitting closer to 6%, and in some instances more than 6% per annum. So in an environment where inflation is 4% per annum, to then earn a return of about 9%, so inflation plus 5, means that every year your purchasing power of your investment grows by 5%, and that's a very attractive return. And we do see that possibility over the next 1 to 3 years. The second question was why international markets have seemed to recover already. They haven't fully recovered, but it was certainly a short and sharp bounce back. We think part of that was based on the huge stimulus package that was announced in the US, so $2.2 trillion, 10% of their annual economic output or annual GDP. So that's a big number, essentially free money for every American family. So part of the bounce back came on the back of that, but we do suspect as more unemployment numbers come out, as more production numbers come out, as more sales retail numbers come out, we will probably see a second down leg in markets because the bad news still needs to be confirmed.
Thank you, Andries. And the final question that I'm going to take from an anonymous is there any tech or e-commerce stock that stands out for you for the next 5 to 10 years? And we'll finish off with Nev on that one.
Okay, thank you, Ashley. So I must first qualify, and I've learned this after a lot of time. This is not investment advice at all. However, what we've seen over the last couple of years, specifically on the tech stocks, has been Microsoft have really positioned themselves within the cloud space. And I think the amount of cloud usage that we're going to see in the next 2 to 3 years is going to be exponential, especially with a lot of the big data type solutions that are going to be coming out there. I think the Chinese health market is something that's been given a lot of attention, especially in terms of providing low-cost healthcare. So there's a couple of jewels within the Chinese market, and a lot of them are more sort of private equity type investments at the moment, haven't really been listed. We're also seeing a lot so within the cryptocurrency space, which is a very notorious and infamous space at the moment. A lot of my colleagues that I follow within that space have given guidance that the virus sees no boundaries. So why should our currency see boundaries, which threatens the overall underlying economics that we've all been brought up with up till this point. And one of the big events that are happening in the next, I think it's 26 days to go, is the Bitcoin halving, where we're expecting to see large increases in Bitcoin prices due to increases in scarcity. However, that market is the most unpredictable market I've ever played in. Unless you were a really early investor, it was very difficult. A lot of the streaming services, like I mentioned, so Netflix, Amazon, Hulu to an extent, as well as graphics cards, which is used for a lot of the processing power, specifically NVIDIA, seem to be showing a lot of value and a lot of promise, and have actually performed in reverse compared to what other stocks have normally performed on. Tesla's another one. I think it's already seen a great spike already, but it's one that I'm keeping personal close eye on. I think Elon Musk's specific investments into renewables as well as into the electric car space is something that should be kept an eye on. But I think effectively companies that are willing to leverage their digital channels the most also are showing great value for money. So I think Amazon is a great investment at the moment for the way that they've been set up for years. They already know how to operate in a COVID environment, and that experience is something that you can't really put a price on at the moment. Thank you, Ashley.
Thank you, Nev. Thank you, everybody, for listening. If you need more information, please visit our COVID hub on our website. We update that almost daily with new insights and information from our technical experts. And any questions that you'd like to ask post this webinar, you may direct them to website@bdo.co.za, and we will answer directly to you. And as I said earlier, all the questions that came through on the Q&A of this website that we couldn't get to, we'll respond to those directly to you as well. So thank you, everybody, and enjoy your day further.